Hello, everyone. Welcome. This is something that I usually tend to do. I mean, it's something that you keep asking for it, the price action trading. So I'm very, very glad to present it once again. The art of price action trading. So 27 people are here. So this is what we're gonna see today. So solely how you can monitor the candlesticks, what information you can gain from the candlestick bodies, and how the way they perform. We're gonna see everything in a second. I need to go through the disclaimer wording as usual. Before I do that, however, I would really, really appreciate if you can keep me posted in regards to audio and the slides as well, whether you can see them and there is no any technical problem. So until I have any feedback from you, I would like to highlight that this webinar is being recorded. So after the end of the session, you're going to receive a recording. And we tend to put also a podcast. So if you prefer podcast, we also offer that. What else? And as I said, I really, really appreciate if someone could give me feedback in regards to the audio. Until I have a feedback, I will read out loud the disclaimer warning. So, this material provides a general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, please seek independent advice. You can find the full risk disclosure on our website along with any legal documentation that you might need. Feel free to check our website www.hfm.com. So thank you very much for confirmation, Eda. So we are good to go. The handout, sorry, I forgot to mention that they have added the handout on the handout section, the slides in a PDF format. So you can download them from the handout section here in the GoToWebinar software. So I'm gonna skip myself. The art of price action. So in simple terms, the technique of reading the price solely without the use of any technical indicator. So this kind of trading technique allows you to read the market and make some subjective trading decisions based on the recent and actual price movements rather than relying solely on technical indicators. So just to clarify something at this point, guys, there are people that they have the mind of a price action trader. I mean, it works for them, so they found price action trading more efficient for them. It doesn't necessarily mean that it's for everyone. Okay, so we're gonna go through what it is, of course, how you can identify support and resistance levels, reversal, where and when it's a good time to enter the market based on the price action analysis, where to place the stop loss based on the and the target based on the price action analysis, and etc. And of course, you can ask anything you want. I'm here to help with anything you need. Just stick it in the question box and I will reply on spot. So we are good to go. Where's my notes? Here we are. Price action, as I already mentioned, is the movement of the asset, is the price movement of the asset. So we solely focus on the candles, okay, on how the body of the candles, the tail, and the price action as such. So it cannot be considered technical analysis, neither fundamental analysis. So it's a trading strategy that is neither technical, as I said, analysis or a fundamental analysis. It's just purely with the price move, okay? So price action traders, they just observe what is going on right now, the recent movement, and this is their technical indicator. So the price movement is their technical indicator, and based on that, they're placing their trades based on the information that they have gained from the price action and based on their individual decision making. So, okay, so have just a short, not introduction, just to clarify a few things again, just to make it clear for you. So we have in the market, we have bulls, we have bears, right? Those bulls and bears are retail investors, institutional players such as banks, hedge funds, people that trade in billions. So have always in mind that what moves the market is those institutional players, so people that trade billions, okay? Not us that we're trading like, so I don't know, you might have trading your savings, you might trading part of your salary, I don't know, but yeah, what moves the market is the big institutional players. And as I said, by what we mean big institutional players is banks, hedge funds, companies, market makers, and in general people that they trade millions and billions, okay? So short-term traders are not the short-term or long-term ones, or retail traders in general, not the ones that move in the market. So, by the way, just to clarify one more thing is that price action strategy, and in general, the price action approach is for any time frame. I mean, it can be used for, and it is widely used for short-term trading, but also it could be used for medium and long-term. Many short-term traders rely exclusively on price action on the price action to make any trading decision. Okay, and as I mentioned earlier, this is their sole technical indicator, because after all the technical analysis that we have seen so far, all the technical indicators that we have seen so far is a derivative of price action, right? I don't know whether you have been with me, I mean, whether you have seen mine's or Stuart's webinars in the past, but any indicator that we have presented, we always put on the formula that it might be, that is based on. So all the technical indicators that they have been generated, discovered, etc., are based on the price action. So they are a derivative of a price action, because they're taking into consideration the past prices of an asset and the current prices of the asset. Okay, so and they, based on that, they're giving a result that is useful for for taking a trading decision. So price action can be seen and interpreted as a technical indicators because it gives us a lot of information. So price action can be seen and interpreted using simply our charts by just observing the prices over time. So the only thing that you need is support and resistance levels, and a very close observation, careful observation of your candlesticks. This is what will give you indication of a strong or weak support and resistance levels. That's why preferably we use candlestick charts. Okay, you know that candlesticks, they are the most they are widely used on top of line chart or the pink candles. So because they are very useful. Actually, they give you a better visualization of the price action. They display the high, the low, the open, the close, and just by looking the color of the candle, you know whether it was an up day or a down day. Okay, so that's why candlesticks are a bit preferable. I mean, I cannot really, I never changed to any other type of candlestick, to be honest, of price action, to be honest. Say candlestick patterns, candlesticks are just straightforward for me, at least, so I cannot really read any more. Any line charts, it would be too difficult. So you know that they have been, we have went through in the past candlestick patterns, such as there are plenty out there. I mean, there are a lot, but some of the most famous ones are shooting star, evening star, harami, hammer, double top, double bottom, rounded top, rounded bottom, head and shoulders. There's so many. I mean, candlestick patterns that could with the use of trend lines, they could again provide some signals, etc. There is a big range of patterns that they clearly, or candlestick patterns that they help us identify just by watching the charts, the direction, the momentum, right? So and the candlestick patterns that you might already know, or you know some of them. Equilibrium pattern, for example, harami, I mentioned it before. All these are examples of visually interpreted price action. So the aim here is to find order in the sometimes seemingly random movement of the price. So let's move on. And to be more specific, price action is something that is mostly common to, okay, other than retail traders, but also to institutional traders, that they tend to trade in a longer time frame. You know, banks are setting their targets for the whole year, or even a 5-year length, and etc. So it's something that it is very common, other than retail traders, but also to institutional traders. Although it's becoming a bit less, I should say, popular. You know what? Have I put it over here? No. Okay. So just for you to be aware that even day traders, okay, they keep at the end of each day, they're trying to identify how the day close and to check whether there is any pattern going on, because that will give them a clue in regards to any potential entry on the opening the next day or any pending order. So many day traders are placing very large trades, often with the use, of course, of leverage, using the price action as their only guide with the goal of generating a profit from a very small underlying movement. So technical and fundamental analysis aren't in this case useful, given the fact that the very short-term nature of price movements, but also the fact that price action can provide some helpful clues into supply and demand balances. So, what else I should add over here? As I said, okay, so let's see some examples of price action trading. So first of all, is to identify the trade condition, whether the market is in a bearish momentum or a bullish momentum, is in an uptrend or a downtrend. Okay, so have in mind that any decision taken based on the price action is subjective, because take a trade based exclusively on your own thoughts is subjective. So price action analysis is not just to see the asset and decide what you will do. No, it's a more in-depth approach. You need to check, are we have any swings higher, swing lowers? Do you have any repeated bottoms or any repeated tops that could be considered as strong resistance support levels? Do we have any breakouts from previous highs or previous lows? Do we have any consolidation? Well, how big the daily candle is, how big is the latest candle, if we are in a shorter time frame, and etc. So it's not just a matter of where it has been, whether we are in an uptrend or a downtrend, but also is a matter of identifying key levels, breakouts, patterns, and observe the tail and the body of the candle. We have a live analysis tomorrow, Raymond. I will try, but later on I need to go through the slides first, okay? Because after all, this is an educational session. So yeah, if we have time, I'm gonna do it later on. Yes, okay. If you have anything specific in mind, any asset and a time frame, I could do that, but I need to have as a priority to go through the slides for sure. So, because we have new people here as well, 60 people are watching right now, so I need to make sure that I need to take it this step by step. So, also, we need to understand the concept, first of all, okay? As I said earlier, in the market, we have buyers and sellers, so we have two parties, right? In order for the price to move, we need to have someone to buy and someone to sell. So we have two parties in the market. So a trade occurs only when these two parties, the buyer and the seller, take two different view on the same security. So I might go, I don't know, short, I might sell an asset, but Raymond might want to buy. So why that happened? Why at the same moment I wanted to buy and Raymond wanted to sell. That is because we had two different how can I say, two different, not approach, but perceptions. We had two different conclusions. We had two different judgments. Okay, so in theory, the buyer and the seller should have access to the same information, right? We all have Google. We all have access to the economic calendar. We all have, I mean, the same thing that you can see online, I can see them as well. So we all have the same information about something. Data from the news, technical indicators, fundamental analysis, recommendations, etc. Despite that, we have two opposite conclusions. The buyer and the seller comes to an opposite conclusion. Why does this happen? Simply because each of us, guys, each trader out there has a different behavioral judgment that leads to trading with opposite views. Okay, for example, so we have over here 1 hour euro pound. Okay, so we have the 5 and 9 exponential moving averages. Okay, they are visible to every one of us, right? They are there, visible to everyone. However, this move could be for me, for example, a buy signal, but for you might be a sell signal. So any crossing of the 5 over 9 could be interpreted with a different way. Buyers may base their decision on the standard recommendation of the moving average crossovers, while sellers may take a contrarian view by saying that the standard recommendation to buy on crossover will lead to an overbought situation and hence it is better to sell. So it's different perspective, it's different point of view. So for our time frame on gold or S&P USA 100. Okay. We have went through that. Okay. So over here, I missed anything. Okay, yes. Before I go to the chart, just to clarify something, guys. Tail, we are referring to the line, the how far up or how far low has the price went before closing, and the body is just the difference between the open price and the low price, while the tail is the difference between the high and the low. I mean, it is so over here you can see that it opened here. Sorry, it opened here because the black one, so it's a bearish candle. It opened here. It tried to move lower. It tried to move as high as here, but it didn't manage. And at the end, the bears win, and it closed over here. So we have a small body candle and a very large tail to the upside. That means that the buyers push the price higher, but at the end the sellers manage to take the control. So the body and the tail matter. It gives us an indication whether who is in control. Okay, so over here we know that there was a big fight from the buyers. There's a lot of buying pressure, but sellers won, but they won just a tad, just you can see. Prayer, can you log in and log out? It's impossible not to see because I have checked it and the screen is there. So maybe it's your connection, it delays the picture. Maybe you need to log in and log out again. Make sure that you have the audience view on. So yeah, as I said, the body matters. if we have a small body candle, we need to question ourselves who is in control, whether the momentum is rising for bears or is rising for bulls. If we have a big body candle, that's a bit more easy. Like here, the green one, we can see that it opened here and it closed without any attempt higher. Okay, any further attempt higher, and a very small tail below. So that means that bulls are in control. They open here, they managed to close at the high level, at the highest level of that session. Okay, so the body matters. Okay, so okay, let's see different examples in order to identify or actually examples in order to help you how to spot a trade. Okay, so I will start with a consolidation. I will start with a ranging market, because price action, the benefit of using price action is that you can use it, you can actually take a decision and you can enter the market even if the market is consolidating. Oh, that's on you. Prayer is saying that he cannot hear me, he cannot. Please and log in. It seems that it's from your end. Oh, it's okay now. Are you sure? Are you sure? Prayer, are you okay? Are you with us? Prayer? You still facing problems? Okay, he will reply, I guess. So yeah, the benefit, one of the benefits is that it could be useful for sideways movements as well, for consolidate for range markets. And an example is over here. So what we are taking over here, we are seeing some sideways movement which eventually bottom over here, right? The asset rebounded but unable to break that level over here, to break any to proceed in any new high and etc., and reverted back here again. So for a second time in a row, even third time in a row. So over here we have a support level, because it's an area in which we have seen our candles retesting but never managed to break it. So this is how you can spot the support level based only on your candles. So repeated the floor, unable to break it. Repeatable resistance, unable to break it. So that's so just with the ribbon on eye, we can spot that this is a nice resistance level and this is a strong support level as well. So what's going on if we're seeing a bit of a consolidation, a bit of a decision, I mean some dodgy candles on those areas? So if we spot indecision at the support and resistance area, that means reversal. What I mean by that, you know that a clue, a sign of indecision, I mean, by saying indecision, I'm referring to the fact that markets sometimes don't know uh, what to do. I mean, they are a bit cautious. So indecision can be spotted with some dodgy candles, such as that one, that one, that one, that one. So long candle with a very, very small body, or even not a body at all. I mean, closing close to the open price. So if such candles are seen, doji candles are seen at the support or resistance area like this one, so I'm gonna draw them. This is what we say indecision at the support and resistance level. This one, I mean, in general, it was sideways. These ones. So indecision, doji candles at support and resistance level. So something like that implies to reversal. And we can clearly see that over here. It tried to come up to break that pre-existing resistance because it used to be resistant earlier, okay? Didn't manage, consolidated, posted some doji candles, and eventually reverted to the downside. So the same something else in our support level, consolidated. So for 1, 2, 3, 4 sessions, it didn't manage to extend lower. Instead, it was sideways, something that implies and signals a reversal. So it bounces away from the support level. So have this equation in mind. Support and resist, actually indecision on support and resistance levels equals with a potential reversal. Reversal trades includes three parts. First, you have a preceding trend, then indecision on support and resistance level, and then a reversal of the trend. You might say, but Andrea, over here I don't have a trend. Yes, the overall picture is consolidating, but if I focus just in the short term, yes, I do have a trend. Down, uptrend, downtrend, uptrend. It's reversing. So ask yours, in order to understand how you can read the candles, you need to ask yourself who is in control of the price. So over here, you cannot really tell who is in control. Why? Because we have a very large tail lower, indicating that sellers fight a lot to push the price lower. Eventually, though, the buyers, the bulls, tried to fight back, and they managed to close over here up slightly above the open process. So there was a big fight, but we cannot tell for sure. We cannot tell with confidence who is in control, because we can see a strong fight. Can we say that from both? It's not like that over here that is clear, or that one that you can know. We can say for sure sellers are in control, sellers are in control, bulls are in control, bulls are in control, bulls are in. So you need to do that question every time that you are seeing a close candle, that you are monitoring the latest close candle. Let's move on. Oops. So this is the beauty of price action, because by spotting support and resistance levels, so levels at which the price failed to break, and then by monitoring the body of the candles to identify any indecision, any breakout, or whether the bulls are in control or the bears are in control, you could spot your entry point. Okay, and an example is this one over here, which I will analyze in a second, but let's check first that, oh, sorry. I will come to the euro dollar afterwards. So let's do that first. So it's similar to what we have seen previously. We have spotted a support over a resistance over here and a support over here. So the support sometimes could be also the latest low. Resistance retested once, twice, 3 times. Actually, there was another one, 4, 5, and failed to break. So that was our resistance, that was our support. Eventually, it broke the resistance. Actually, it retested over here and eventually closed the candle above it. So we have 1, 2 strong body candles, which indicate buying pressure. Because look at this body. There's a big body, full body candle with just a tiny tail above, indicating that bulls are in control. Then the very next one, there was a bit of a fight of sellers, but the body is bigger than the tail. So that suggests that still bulls are in control. Okay? So is the very, very first indication of a potential long position. Indecision followed, however, doji, a body in the middle of the candle, small body candle with a big tail. So some sideways move followed on the resistance level, which eventually confirmed an entry on the breakout of the latest high over here. Okay, so resistance now becomes support, is not an entry, but the entry could have been taken either with the breakout of this high or this one. So if you miss that, you could enter long on that one. Then penetration. Okay, it went as high as here and then started slowing down. So that was our new resistance level, right? So over here, we can see a pattern. This looks like a shooting star. It is shooting star, which is a bearish pattern. So shooting star followed by doji and then a sharp fall, which is the entry point for a short position with target at this time at our previous resistance level. So the previous resistance level is now our new support and our target. Yes, it matters. Yes, it does. It does. Look at this. Look at this. That was, even if you didn't consider entering long on the short on the breakout of this latest low, it wasn't late because that candle was a confirmation that now the sellers are in control. So even if you miss that, at the closure of this candle, you could still enter short with target over here because you have seen the body over here and you were sure that sellers are in control. Both matters, dear prayer. If you spot a pattern, perfect. That is strengthening your decision. But body always, always, always matters. It's just giving you further confidence and further trust on your decision. So here another example. So I would just focus, where should I focus on that one? No, let's do that. We have seen that it entered the euro dollar in a 30 minutes chart this time. It entered, it was moving very, very dodgily, very small body candle, sideways, lack of momentum, right? So based on this, the latest, that the bottom, okay, just ignore this move. The bottom, the latest low, the lowest low over here could be useful as our immediate support level. The high, which is up here, okay, I cannot do a straight line. The high within this time period, it was our resistance level. So you understand that a breakout is what is triggering an entry point. What strengthens our decision to go short, okay, other than the fact that we have a breakout, is also the body of this latest candle. You see? Strong bearish candle closing very, very close to its lowest price, right? Exiting this range, breaking the support level. So here that was an ideal entry point. The very next one that followed was also presenting that sellers are in control because it closed far below the open price with further steam to the downside. This low tail suggests that there was a lot of still a lot of selling pressure. So that was another entry point. Now, in this case, I don't have the full chart in order to be able to help you spotting the target level, but the target area could have been a previous bottom, okay? Or you can use your risk and reward ratio and set the targets appropriately. Stop loss could have been at the resistance that the previous resistance or slightly above the broken support, which now could be our new resistance level. So initial stop loss could be at the resistance at this area over here, and as the asset moves down, we could drag and drop our stop loss at the support that now is converted into resistance. Okay, so what did I miss? Okay, now let's see further examples. As I said, it's not only a matter of price action, but also patterns that you can spot with candlesticks. Okay, so that's one more example. In this case, we don't have consolidation, we don't have a ranging market, but we have spotted an ascending triangle. What I mean, the asset used to be in a downtrend, right? It bottomed over here initially, rebounded, topped over here, drifted again down, rebounded, and it retested the same territory as this one for a second time in a row. Okay, so that is could automatically be set as our immediate resistance level. Okay, then it reversed it again, posting another higher low. So by connecting the lows, we could see that this is our support trend line, which is ascending. So it is forming something like an ascending triangle. So the top, the resistance is flat, but the support is rising. So because we have higher lows. So it is traded within an ascending triangle. So the bottom of the triangle is our immediate support and the top of the triangle is our resistance. So any breakout of the support, okay, it could alert a possible downtrend. While any breakout to the upside of the resistance, it could suggest an uptrend, a potential uptrend. Okay, so this is what we're having over here. Supply, which is our resistance, is in a flat line, okay, and support, which is the demand, is in a rising, ascending line. So over here, in this example, in this stock example, we can see that it managed to close over here above the resistance line. So we have a breakout point over here. However, the body of the candle over here is not so strong, right? The body is at the middle of the candle. So it doesn't give us a lot of indication whether bulls are yet in control. But that was the very, very first sign that we might see an uptrend developing, but it wasn't an entry point. It was a breakout point. So we needed more clues, right? So the more signals, if you prefer. So signals came afterwards because the next candle, even though it was bearish and strongly bearish, it managed to be held above the resistance level. The next one also held above the resistance level. So that is now turning from a resistance into support. And the other two that follow, they were bullish. So we have 1, 2, 3, 4, 5 bullish candles, okay? So in general, so we're seeing that there is a slowly increasing bullish momentum. So at any of these points, I mean, either on the fact that we have this candle over here breaking the previous and be the second consecutive bullish candle, we could take an entry with stop loss at this case slightly below the resistance level. So what I mean, you consider taking an entry anytime over here, then stop loss should be slightly below the resistance level, which now has converted into support. So that would be somewhere here. Why is that? Because it's below the resistance, but also is the bottom of that breakout candle. So long position with stop loss over here, and where should be your target? An easy way, unless if you have your own strategy that you follow in order to set targets, another easy way, if you have spotted an ascending triangle, is to measure the base range. So you have spotted the triangle, right? So go back and measure the beginning, the distance on the beginning of the triangle. So the base of the triangle. So measure this distance and use that as your target area. So place that from the breakout point higher. So you have the target over here. So measure that, set it on this of the resistance on the resistance territory, and it will show you the target level, okay, or a potential possible target level. Of course, each one of you has his own way to identify or its profit level, its take profit level, its target, and etc. This is one way to do it. So more examples over here in S&P 500 daily chart. So the very first step that you need to do, guys, is spot your immediate support and resistance levels. And the long-term ones, I mean, if you have seen, you zoom out and you have seen that there is a repeated floor or a repeatable resistance, put a line, draw a line, just to remember in the future that if that line breaks like that one, then this is a signal. Okay, so anything you need and triggers your attention, put it on, because you will need it in the near future. You see, so you can either trade on the reversal if your asset is in a range. So remember, indecision at support level means rebound. Indecision, you see this indecisive candles. Indecision at resistance means pullback. Breakout at resistance followed by further bullish candles means further upward trend. Breakout, do we have breakout of support? No, we don't have in this case, but breakout of support followed by more bearish candle implies to a potential short position, okay? Sell position. So there are further and further examples that you can see over here, okay, which we have a we had a really sharp selling, breaking this double bottom that we have seen over here, okay. So finding a new support over here, which eventually broken over here. However, we had to be, this is a daily chart, so this is a medium term time frame that needs a lot of patience. As you can see, even despite this breakout, nearly a month of 2 weeks of consolidation followed before the asset take the desired direction to the downside. Okay, any questions so far? So another, if you missed this entry, another one followed over here, breaking this continuous four times retested support level So that was another entry point over here. So for those that they have already had a short position, that could be also that could add on their position, and so on and so forth. So okay, perfect. So gonna move on. We have already seen this this example. Okay, we've spoke about so the way that, so the mentality is the same, guys. Okay, spot support and resistance level, monitor the body of the candle, monitor any breakouts, and whether they follow by candles on the same direction that could strengthen your decision. Use the past support and resistance levels as your stop losses or as your target as well. So in this case, we have used the latest support level of a short entry. So short entry was taken either here on the breakout, on the decisive candle over here, and on the breakout of it, or somewhere here. So there was a renewed sell-off with stop loss above the latest high, so the latest resistance. And target in this case could be our past resistance, so this one, right? Or the one before it, or even you can measure the distance between the past support and resistance and set it on the same distance from the entry point. So what I did over here, I measure the distance between the support and resistance level. So if I assume that I missed this entry and I had this as my entry, then I have to measure the same distance from the entry point in order to find my target. No, prayer, that's up on you. It's not sure how it shouldn't be one to one. The decision on what would be your risk and reward ratio is solely up on you. I'm just giving you some ideas, okay? This could be target 1 and the past support could be target 2. Or if you don't want to do it with this way and you are solely relying on your risk and reward ratio, then do that. It shouldn't be 1 to 1, no. It could be 1 to 2, it could be 1 to 3. This is up on you. Just stay a bit don't set your risk and reward, I mean, 5 times greater. I mean, that seems a bit risky to appropriate risk management. You don't need a huge presetting trends in order to decide. Just okay, perfect. So let's move on. Oops, sorry. So, okay, that's just a bit of a summary on where you can place your support and resistance, so your target and your stop loss. But as I said, each one of you has his own system. Okay, this is just some ideas that you can consider. If, like prayer, was using risk and reward ratio in order to set his stop loss and his to set his target, that's more than welcome. Just don't get too greedy, okay? I mean, setting your target far away just to gain more, it's wrong. Set it at a reasonable place, okay? An idea is to use as your stop the levels behind the support and resistance levels, like we show, or at the latest high, not too wide though, okay? why targets, a smart way to place your own target is in front of support or resistance level, depends on which side of what's the direction of the market. The weaker the better, less barriers in the area. Or if you're gonna set your risk and reward ratio, if you're gonna use your risk and reward ratio, make sure that you're placing it at a reasonable place and don't get greedy. Okay, so just this is further examples, further simulations of the price action. So just to clarify that when I initially said in decisional support and resistance levels, it doesn't necessarily always have to be in the form of a doji candle. Okay, decision is also when we are seeing consecutive candles unable to take a direction. Okay, like that one, moving sideways pretty much. So that used to be a support, turned into resistance, right? And broken. So it was a very, very strong level to be monitored. And you see how strongly it was broken? It was followed by, it was preceded by a full body bullish candle, another one that closed decisively above the support, above the resistance level, and a third follow. So we had 1, 2, 3. That was a very clear indication that we are in the beginning of a very strong uptrend. Okay, so support has retested for a second time. Indecision at the support level, broke it. Indecision followed, but then another bearish candle confirmed that there is a new trend to the downside. Further indecision, but it remained on the direction, the downside. So you see, didn't close, it couldn't close below it, it couldn't close above it. Again, the same thing, it couldn't close below it. Indecision again, didn't close. So all these swings are tradable. Okay, candle closes up and above our resistance level, and that is now converted from an old resistance into a new support, which could be eventually used as our target if once the asset pulls back again. Also, the distance between our initial support and resistance level, as I said, could be used in order to spot the new target. So that was pretty much it, but because I remember that Raymond asked me for a live analysis, I'm gonna quickly bring on the gold and Nasdaq since you wanted it, and I will finish with those two. So you mentioned gold for our chart. Let me take all my indicators out since we're doing a price action trading. I should remove fractals as well. Okay, so oof, nice. Okay, very, very nice. So very first thing that I'm gonna do, dear Raymond, is spot the resistance and support levels that I can see with my own eyes. Okay, another one that I have spotted is this one over here. Very, very good. Also, the last few days, actually since last week, can see lower highs and lower lows over here. That looks to be like a descending triangle, broken, a very strong decisive candle. But since that break, I can see that gold didn't get back to the it's in a pullback. So what we have over here, oh, wait a minute, that was an old support level. So once, twice. Very, very, very interesting. So if it sustains this support level, it used to be support level. Can you see that? It used to be support level the end of September, the very first 2 weeks of October 13. So from the 28th of September up to 19th, which it broke. And now our gold is actually retesting that area. So if you found support over here, if we see unable to break it, okay, that could so depends on the body of the candle though. So we had a decisive candle lower over here. That's a clear strong bearish candle, but it didn't manage to break that support. You see that? It didn't manage to break it. So what we need over here, what we need to wait, is either to see whether that candle, the new candle, will actually close lower, or whether it will signal a rebound, whether it will be a signal that bulls are in control, at least in the near term. So something like that, finding a floor over here, could suggest the retest of this immediate resistance over here. But we need to wait for this candle to close, because there is no breakout confirmation over here. Okay, so the best time to use any oh, what's the best time to use for a day trader using candles? No, price action trading, dear Wakera, could be useful in any time frame. But you need to stick to the one that you prefer. So if, for example, like Raymond, he asked me for a 4-hour chart, because I guess it's what his favorite one is, what he's trading the most, 4-hour chart. So whatever you decide, whatever suits your personality, and also the time that you have to spend, that you have available to spend in trading, right? I mean, if you're busy with something else, that you don't have a lot of time to dedicate to trading, then you need to consider higher time frames. But if you have, for example, 3 or 4 hours a day to be committed to the trading, then you can consider small short time frames. Stick to the one that you prefer and try to find immediate support and resistance levels for that one that you have chosen. Okay, don't go up and down though. Don't try to spot like we did over here. We spot the support and resistance levels in a 4-hour chart. It doesn't make sense to go down to a 5-minute chart and use those support and resistance levels that I have found in a 4-hour chart. Okay, do you get what I mean? Hopefully you do. So gold does USA 30. So just to summarize with the gold over here, if it finds a floor over here, if it proves that it's unable to break it, okay, it might be in the form of a doji candle like here in decision, it might be sideways before we see a nice bullish candle suggesting that bulls are in control. Then in this scenario we could see that it's testing that previous resistance over here. If we see a confirmed breakout, then the next support is the bottom that we have seen back in 20th of October. Now I will quickly shift to USA 100 and I will close the session if there are no further questions. Price action trading again. Raymond asked for a 4-hour chart, so I will stick to that. Okay, so what we have over here, a lot of indecision actually. So that's nice. Okay, so our latest, so what we have over here. So we had some higher lows last week and some higher highs as well. Okay. No, trying to find. This is the latest resistance that we have seen. So what we have over here, okay, the trend lines that I have just used could be used as our immediate support and resistance level, okay? And what we are gaining over here is a bit of an indecision at the high territory of this channel, okay? So I'm gonna put some lines on, okay? So if I zoom in, okay, this is a 4-hour chart. We have a lot of indecision. Can you see that, guys? A lot of indecision the last 4 consecutive 1, 2, 3, 1, 4, 2, 4. Yes, last consecutive candles. So, and the price is been at the high territory of October. Okay, so I put these immediate lines, these immediate support and resistance levels, just because it will be easier later on if we have a breakout, if we have a confirmed candle closing above this area or below that area, it will give us a clue whether sellers are back in control or whether buyers are back in control. So for the time being, there is a lot of consolidation. You can see from the body of the candles, the fact that it is being held in the upper territory of this week for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 sessions in a row. So since yesterday, it was unable to break the high that we have seen. Our should be, yeah, yesterday 11,527 was the high, so it is unable, it looks unable to break it yet, and it's directionalist. So it has been moving in an up channel. Okay, the body of the candles for the time being are not presenting any direction. They are small body candles. There is a lot of indecision at the high territory of the week. So we need some further, we need to be a bit patient, it seems, for dear Raymond for this one. On the breakout, however, if it breaks up, breaking that the high of the week, the next resistance area, okay, it could be the actually we have two. We have that one that it used to be a resistance back in the end of September. So we have that one. So that should be, let me be precise. Somewhere here. To be precise, not here. That should be 1, 2, 3, 4 was it says 4 times at 11, 5, 6, 7. And the next one at 11, 7, 12. So that is a resistance that we have seen for 1, 2 weeks. No more, actually. Yeah, 2 weeks in a row. So that's pretty much it. A lot of consolidation is what we're going on right now. Not actually right now, since yesterday in the Nasdaq over here 4-hour chart. Okay, so a pullback could trigger a move lower to this trend line, to our support trend line, while a break higher could open the doors to the previous resistance areas. So guys, if there are no further questions, I will call it a day because we have covered everything. That was pretty much from me. Just a bit of a okay, one more question. How can I find the measuring tool? Okay, measuring tool. Sorry, good question actually. We don't have a measuring tool, but can you see this arrow over here, this crosshair over here? So what I do, I measure that. So I measure. You need to keep your mouse pushed and drag and drop, and you can measure it like that. You see 630 points. So you measure that, you keep it, you keep your mouse clicked So and there are more information that this is giving you. It's giving you how many, so it gives you the distance, but it also it gives you sessions. So from here to here, it was 47, 47 sessions. So 47 candles. Are you okay, Oliver? So we can measure it, the base of our range over here, like I suggested in the slides, 585. That latest move, ooh, that was nice. 548. Nice. So it kept some kind of a same distance, so this could be useful in the near term. Are you okay, Samuel? Did you saw have you seen what I've just showed, the way to measure the distance? Cool. If you need anything else, let me know. So guys, anything you need anyway, I'm here to help, and me and the whole team. So don't forget that you can contact us via social media, but also in the webinars at hfm.com email address, which we try to reply within the day. So anything you need, just don't hesitate to contact us. I mean, put me some screenshots. Tell me, Andrea, I have done that. Here's my screenshots, and it didn't work, or it worked, or it did. So we are here to help anyway. It's for free. You know that we have been here we've been here for 6-7 years now, and yeah, we've always been here to help. This is why we have employed for. So I will call it a day since I have seen that there are no further questions. Just to mention at this point that we have finally a mobile app, our own mobile app, not the MT4 in an application, actually our own HFM mobile app in which you can trade anything you need from your mobile phone. So have a look, download it, check, give us feedback, by the way. If there is anything that you don't like or you do like, give us feedback in order to improve it as soon as possible. Brand new app. Trading application this time. We had for many years an HFM app in which you could see the news and etc. But having a trading application is something new, so you can yeah, brand new. I would really appreciate it. I would really appreciate the feedback on the app, what you like, what you don't like, what you want to change, and etc. So thank you very much. Have a great day ahead, and see you again tomorrow with a live analysis at the same time in GoToWebinar, but also in all our social media. Thank you. Have a great day ahead. Take care, guys. Bye-bye.